What up, everybody? You're probably like, whoa, where's Mitch? That's not Mitch. You're damn right. It's not Mitch. Spencer Israel here filling in for Mitch today. Mitch getting emergency root canal. I tried to get him to do the show today anyway, high on painkillers, but he said no. He said no. So you're stuck with me. Let's bring in the main man here. I'm not the reason for this show. The main man here, Chris Katje, the reason for this show. Chris, good morning. How are we doing today?
Good morning, Spencer. I'm doing great. How about you? Thanks for filling in.
Yeah, no problem, man. No problem. It's always easier to fill in for Mitch than it is to fill in for you, because you do most of the talking, and I just got to be the guy doing the stuff in the background, which is great. So we got a good show today. Chris, who's our guest?
So we have a great guest today. We're going to be talking SPACs with an expert in the industry. So we have Will Bunker from LightJump Capital. He's a guy who helps companies go public. So, via traditional IPO and also the SPAC route. So we get to learn a little bit of the behind the scenes process, maybe of some of these companies, choosing a SPAC to go public.
That'll be around 10 or 15 minutes or so, give or take. But in the meantime, let's do some headlines, shall we? I think we should do some headlines.
All right, yeah, so let's get to headlines today. Not a lot going on out there. We don't have any new deals announced today and only one small rumor out there. But we do have a couple former SPACs that reported earnings last night, so we'll try to get to some of those. We have Desktop Metal reported last night sales of $11.3 million for the first quarter. That did come in higher than the street estimate of $9.4 million. And they reconfirmed their full year guidance of $100 million. That is ahead of street estimates again. And they talked a little bit about some of their new products, right? So they recently introduced Forest, which is printed wood parts. They launched Flexera, which is dental applications that Mitch and I talked about yesterday on the show. So they're expanding, their entries into new markets for the 3D printing. So Desktop Metal, it did fall last night, but to me, it still looks attractive long-term with some of those catalysts coming. And we had Metro Mile, ticker MILE, report earnings. So first quarter sales of $17.3 million. They reaffirmed their full year guidance. They also announced a partnership with Hippo, which is also going public in a SPAC merger, for consumer protection for home and auto. So Metro Mile, remember, is the pay per mile car insurance company. And as I've kind of predicted, they need to expand maybe into some other insurance markets. So it looks like, they're partnering with Hippo for further penetration of home and auto insurance. So keep an eye out on this one. And then we have Blade, BLDE. So this is an electric vertical takeoff and landing company. So revenue was up 44% in the second quarter. They talked about, that pent-up demand for leisure travel that they think can drive growth for Blade Airport, which is going to relaunch on June 1st. So at New York City airports, starting with JFK, they're going to offer their services for $195 a seat or $95 a seat if you have an annual pass. They also have a partnership with Kayak that's going to expand their customer acquisition pipeline. Kayak, one of the largest travel booking sites out there. So keep an eye out on Blade. It looks like they're going to be early to the eVTOL market that has had several entrants go public via SPAC. Blade's actually going to start those devices, with this June launch. So keep an eye out on that. Then we have XL, so XL Fleet. They announced earnings and also reported the purchase of World Energy Efficiency Services for $16 million. This is a bolt-on acquisition in the charging infrastructure market that they've started to expand into a little bit. So this was a profitable business with $18 million of revenue last year. So, buying this company for $16 million that's got profits and $18 million in revenue, I think was a decent headline. And then the first quarter sales were only $700,000, missing a street estimate of $970,000. They did say that they have seen modest improvement in demand visibility for the second half of 2021. Keep an eye out on XL today. This is one that's been hammered down since completing that SPAC merger and also attacked by several short reports out there. Then we have ZEV, so recently completed their merger. Lightning eMotors reported $4.6 million of revenue in the first quarter from sales of 31 commercial electric vehicles. So they see full year revenue of $50 to $60 million and 500 units for vehicles and powertrain sales. So decent guidance there from them. Their backlog at the end of the quarter was $169 million and a sales pipeline of $807 million, both going up. So keep an eye out on this one. With the strong guidance and then also that strong backlog, see if they can convert some of those deals this year. Then we have Canoe, so GOEV. So they had new details out yesterday about their new electric van that's going to start at $34,750. They're going to start taking $100 deposits for that, so hoping to get some orders. And then also it was unveiled yesterday that Canoe is being investigated by the SEC. So not the headline you want to see along with the electric van rollout. But this is a company that's faced several problems and some red flags, right? They lost several executives and now being investigated by the SEC. So to me, this one I would stay away from until we get more news out there from them. And it is 13F filing season, so lots of notable, hedge funds and investors with those Q1 purchases. Several SPACs involved. So the big one I saw, Michael Burry of the Big Short fame. The big headline was that he bought lots of puts against Tesla. Along with that, he also took a stake in VACQ, which is bringing Rocket Lab public, a SpaceX rival. So the question I had in an article yesterday, was, is this investment a legit focus on Rocket Lab going public and being a large player in the space industry? Or is this more of a betting against Elon Musk and SpaceX along with that Tesla put options? So, interesting to see how long he keeps that position. And then other notable stakes in those 13F filings that I found. We had BFLY, FST, MP, WPF, and SPNV. So, it's nice to see some of these hedge funds, taking these stakes in the first quarter of these SPACs and former SPACs. Then we did get several announced dates for mergers, which we'll get to in our calendar. But VGAC set a vote date of June 10th for 23andMe. And then we have seen, a lower amount of new SPACs filed with, some of the new warrant classifications. But big news out there yesterday, Goldman Sachs filed for 4 new SPACs. To me, this could mean that maybe GSAH is getting closer to a deal. I do own shares of GSAH, or it could just mean that Goldman, sees the potential here that SPACs may rise once again and they can get some new SPACs to market. So keep an eye out on those when they do finally price. And then TPGY falling today, dropped on news that deal for EV Box might not get done. So their 8K filing said that they no longer expect to be in a position to close the business combination by June 2021, as previously disclosed, and that the business combination could ultimately not be completed on the terms that are currently set or completed at all. So keep an eye out on this one. They do have a little bit of time to get this deal done and maybe revised with some new filings that EV Box needs to issue from their audit. But otherwise, TPGY might have to walk away from this EV Box deal and start the process over, which could lead to, some extensions on their vote deadline, and we could see shares fall further. So keep an eye out on this one. We had 2 deals yesterday, SGAM for Redbox up 1% on the day, and SCVX down 1% on the day. The only new rumor I'm seeing out there, we have COVA, rumored to be bringing Indonesian travel startup Ticket public at a $2 billion valuation. That rumor is from Bloomberg. And then, as I said yesterday, we are starting to see the merger vote calendar fill in nicely. We have ATAC voting today, IPOE voting on the 27th of May, STIC on the 28th of May, and then we have several SPACs in June. It looks like June is going to be a busy month for completing some of these mergers. And then we do have earnings later this week on the 20th from Genius Sports, and then Ride next week on the 24th on Monday. So a couple of former SPACs there as well. So what do you think, Spencer? That was a lot of news out there. I don't know where you want to start here. Yep. I know you guys talked about TPGY on pre-market prep this morning a little bit. That one's interesting to me because it looks like maybe that deal doesn't get done at all, or they have to change the valuation. We did see one SPAC, I believe last month, changed the valuation terms. Is that something, that catches your eye and you think we start to see from some of these announced deals?
Yeah, I mean, I was actually wondering that myself because I can't remember. I'm trying to think back, and you would know better than I, but this whole thing is relatively new. I'm trying to think in the last year or so if we've seen a company either change the valuation, you're saying it happened, or B, just say, oh, never mind on this altogether, just never mind. And that's not quite what TPG is saying yet. They're saying we don't know if we're going to be able to close this deal by this time. They're not saying never mind, but is there a lot of precedent for this? I don't know if there is.
Not recently. So from what I saw, there was a couple companies that did call off their mergers. One was is it F45? It's like I think indoor gym company. They were supposed to go SPAC merger. They called that off. And then last month there was one that changed the valuation. But to me, this is interesting. And I think someone pointed out best on Twitter. It looks like their financial reports got audited and they need to restate them. So if you're the SPAC bringing EV Box public and you were basing it on them having $100 million of revenue and doing a multiple of 10, for $1 billion, and now all of a sudden their revenue is only 80 million, do you come back to the table and say, hey, we're doing 10 times 80, so 800 million, or do you say, hey, we're going to cut this even more, or we're going to walk? Where's the line to get this done? But also TPGY, if they don't get this deal done, they face a time crunch to, get to another deal. And with shares trading at 12, you really don't want to take too much time and start to see your shares fall back down to 10. So, interesting play here for sure.
Yep. And this is like the other side of that coin is, when things are going well, you can have two things going for you. You have a good investment team that's looking for a good deal and they're buying a great company. But when things are going poorly, the other side, you get a bad investment team and they get a bad deal. It just seems like the dominoes are just stacked against you, right? So chat's also mentioning IPOE. Yeah, there was a headline out this morning that they announced that conversion, the ticker. They're going to transfer, I guess, from the NYSE to the NASDAQ. Doesn't really matter in the grand scheme of things. And they're going to change the ticker. That'll go through on the 27th of May is the vote date. And then the conversion will happen. Well, what did they say, chat? June 1st. They said June 1st it'll be trade on the NASDAQ. So IPOE is the one that I like. I've said that before. I'm not long it.
Yeah, I mentioned you on the show yesterday, Spencer. I don't know if you saw it, but I know you've been talking about this one and the bank charter, being the big catalyst. And they did acquire a California community bank not too long ago, that they were hoping was going to kind of push through, on getting that charter. But I think that is a key catalyst here. The other catalyst I pointed out is their ownership in Galileo, which is kind of a Amazon Web Services behind the scenes provider for some of these websites that I think could be undervalued here as well. So a couple catalysts coming, but I know you've been kind of bullish on this one. So what do you think with the vote date, the new ticker? Not that it matters, and then the momentum we're seeing now into the vote.
Yeah, I mean, it's all good to me. It's all music to my ears, right? I just want to. It's like a wait and see situation, and this is just another thing, another checkbox. You can just check it off, right? And this isn't like the most complicated, analysis in the world, but like how many of these companies that are merging via SPAC are in a position to like acquire the naming rights for a stadium, which is what SoFi has done, right? With SoFi Stadium out in California. I mean, not many, right? These guys print money, okay? Print money enough that they thought, yeah, naming rights to a stadium, we'll drop a few $1 million on that. No sweat for us, right? So
and they've really stepped up their marketing and their IR. They created a whole new Twitter account for their investor relations. The thing I saw yesterday that they shared was they were even featured on a TV show. I believe it was Blackish. They were on an episode of that where, someone was trying to get a loan or something and SoFi was on the screen in the background. So like you said, the naming rights, they've got their name out there.
Oh, yeah.
And then they're also expanding, their products, right? So they just launched like 10 new cryptos on their platform they announced the other day. So, as you said, they're checking boxes to get this deal done, but they're also announcing, lots of new news and keeping their name, out there. So I think strong brand awareness for them going forward.
So again, not long, but I will probably be long at some point, just not right now. And then someone in the chat mentioned when you were talking about BLDE, I just want to follow up on that. The question was, did ARK Invest buy? Yes, ARK Invest bought about 22,000 shares of BLDE in the ARKX fund yesterday.
Yep, and ARK is invested in a couple of the EVTOL. So we have Blade and then ACIC, which is bringing Archer Public, RTP, Joby Aviation. So it looks like ARK kind of betting on the overall sector and not necessarily picking, one winner yet. But to me, that those announcements from Blade, and actually launching that vehicle, in June, I think is a positive here. Spencer, I know you were on the show when we interviewed Archer, and it sounded like they were a little ways away, right, from getting their aircraft up into the sky.
Yep.
So do you think this is a first to market, winner here, or do you think, eventually it's about cost, or is this just a novelty, or what?
Honestly, it's probably a novelty. That's my honest take. That's my honest opinion. But we're gonna have Will Bunker on this show in a couple minutes here, and he's been an investor in emerging themes for 20 plus years. So we'll get his take on things like that. Before we bring Will on, though, are there any other SPACs on the watch list today? We mentioned IPOE. There are a couple movers though that I wanted to cover real fast. I don't know, Chris, if you had thoughts on Nikola, which is moving again today.
Yeah, I always have thoughts on Nikola, and my thought is, why is this thing moving again?
I don't know.
This thing, instead of going downhill, today it's being pushed uphill. I can't believe this thing is over $14. Why has this thing not fallen more? It fell below $10 once, I think, in the last month or so. To me, they had some positive news out like a couple weeks ago about 2 hydrogen stations. But it just, I don't understand it. I think there's much better companies out there to take a stab at rather than Nikola at $14 here. That
pun was sitcom laughter worthy.
Oh, we got a soundboard today. Okay, I'm not used to a soundboard.
Yeah.
How about Ride? RIDE looks like is rocketing up again today. It was up yesterday, but look at that thing go now. So it's back over the $10 level, which it hasn't seen, in a little while. But the news out yesterday, Spencer, I don't know if you saw it, but they're going to open up their factory in June for a week of events. So they're going to have investors, analysts, customers, shareholders be able to tour their factory, be able to test drive the Endurance pickup.
Wait. When are the dates on this? Because this is not far from us.
So this is Ohio. It's June 24th and 25th. And I told Mitch yesterday, I said, let's go. Let's go test drive this Endurance.
That's not far from that's a couple hours away from us, man.
Let's go. You want to come? You want to come, Spencer?
I could be talking to that for sure.
Okay.
For sure. I could be talking to that. We are going. Yeah, we are going. Okay. Let's bring our guest on here now. Will Bunker, as we mentioned at the top of the show, LightJump Capital, been investing in emerging themes for most of his career. And let's get into this conversation a little bit with Will Bunker. Will, thanks for joining us today.
Hi, good to be here.
Welcome to the show, Will.
Welcome to the show. And just so you know, we don't always match. It's like a weird thing. Chris was going to change his shirt, and I said, no, don't change your shirt.
I feel left out, man.
We'll have to get you a shirt sometime, Will.
We'll get you a shirt. Not to worry. Chris, well, why don't you start and give us a little bit about your background and sort of how you kind of got started in this game?
Old school. I started out in '95 in Dallas. Dave, Kenny, and I built the world's largest dating company. We actually took over the Match brand, and that's why Match is in Dallas. We sold to Barry Diller, and then have been just early stage investing for 20 years, and then jumped on the SPAC train with some good friends of mine, Bob Bennett out of Dallas and Eric Verplu out of Silicon Valley.
Perfect. So let's dive into SPACs here. So my understanding is that you have helped several companies go public via the SPAC route. But before we get into some of those specific companies, let's talk the benefits of a SPAC over a traditional IPO. So, when you're pitching, what are the benefits for the SPAC route here?
Well, the big one, I don't know. Do you remember what Amazon's market cap was when they went public?
I don't.
485 million. That was it. In the 90s and the 80s, you could go public at a reasonable valuation. And then after the crash, you had to be $10 billion, $20 billion, $30 billion to do it. And so there's 20 years of people who haven't been able to go public that prior to 2001 would have been a viable, good public company, and the investors would have caught the upside. So, that's the main advantage. If SPACs had been around in '99, we'd be having this conversation on my yacht instead of, my office.
Awesome. So, we've heard from several of the SPAC CEOs that we've interviewed. They also talk about being able to do, forward-looking, statements and financials. Does that play a big part too in, kind of being able to tell the longer-term story versus the traditional IPO?
Yeah, I mean, it does because if you're going out at an earlier stage, you're looking mostly to the future. And, again, the rules have changed over time, but it's gotten to where, in 2000, there were 6,000 more public companies than there are today. So and they didn't go bankrupt. They got consolidated. I mean, some of them went bankrupt, but they got consolidated, but there just haven't been as many going out. And so we're kind of in an era where there's a big backlog of companies that should be public. And part of that is telling the story of where you're going.
Perfect. So, SPACs were very, very hot last year. In the beginning of this year, we did kind of see, that fade now. What are some things you think that could happen to kind of bring new life back into SPACs and really, get the interest from retail investors, from, day traders back into the SPAC market, to get some boost on these deal announcements that we used to see?
I think, everything was going up. It reminded me of 1999 all over again. You slap .com on your business name and all of a sudden you're worth billions of dollars. However, this time, you've got companies that have proven business models that are just early in their trajectory. So now I think EV is a little different where you're betting on a lot of companies that may or may not get to full production. If you look at Tesla, it was a long slog from day one to getting a factory, to getting that factory worked out. So I think you look at other kinds of businesses like SaaS models, real companies that have, tremendous revenue, could be profitable if they turn the right dial. Those are things that, for me as a sponsor, I want to end up with a portfolio or 5 or 10 companies that are growing 50% a year over the next 10 years. And I think that'll be the real value creation.
Perfect. So, we have heard a little bit from the SEC,
Sure.
starting to get involved with SPACs.
Oh, yeah.
And there's been a lot of rumors, talks. What do you kind of think happens long term? Do you think we see major changes, some minor changes, and what could those be from the SEC for SPACs?
Well, it's really up to them, right? I mean, the question comes down to, when do you want companies to go public? Do you want retail investors to be able to participate in the upside? Or do you just want private equity and late stage venture capital to capture that upside? Now, the danger is, well, I mean, you guys were talking about, the company that had the fake video of the truck rolling downhill, right? So I think we've just got to get past the get rich quick kind of mentality and look at it as, when I talk to founders, going public is not a get rich quick. It just means you're upping the ante and you're signing up to try to 10x where you're at now and get liquidity along the way. But you don't get to sell all your shares the day after your IPO. I mean, it's just not. If you want to do that, just sell your company.
But Will, question. So I want to understand where you think we are in the cycle right now. Are we not past that yet?
I think, depending on how it acts going forward, it feels like we've come back to more of a reality basis, which the three of us are more comfortable with. I mean, none of us, we all lived through the 90s. We want to bring things out that are real businesses that have, we're not looking for a binary 0-1 type company. We want something that, even if everything goes wrong, is still a valuable business. And maybe it just takes an extra year to grow to where you thought it would be.
Can you maybe give us like a timeline comparison as it relates to like the .com bubble? Like, are we in 2001?
We're in April. We're in April of 2000, where the shit's
April
about to hit the
2000. You're saying we just? Oh man! All right.
I have not seen a market like this for 20 years. I mean, where it's fantasy time, baby. I mean, it is just really bringing back bad memories for me. Now, got a good business like Match.com. I mean, we were making tremendous money. We kept making tremendous money. Have something that's, a prayer in the dark. It's not going to end well for some people.
So let's play the good and the bad of what you just said. April of 2000. I guess the good news is if that's correct, the next 2 years or plus is a good buying opportunity, right? If you can find the diamonds in the rough.
Well, a good company is just going to keep executing. I mean, when I talk to founders, I'm like, as long as you raise enough capital to execute your plan in the SPAC process, then you just run your business. I mean, our business actually did better during the crash because advertising got cheaper. So we were able to expand even faster after the crash because we had a profit engine hooked up to the company.
So Will, with that said, what are some things that investors should look for, with these new companies going public via SPAC? Should we be looking, at fundamentals, the financials, and not focusing on some of these, pipe dreams, as you said?
I think it's about the execution of the core business idea. I mean, if you look back, I don't know if you remember everyone making fun of Bezos during the 90s. Oh, this is a stupid company. They're losing money. That guy executed better than anyone else almost in the history of companies. And so, again, if you look at, can this team execute this plan? And are we heading into a future that this company is an obvious thing that's going to exist?
So, you mentioned that there's, not as many companies public now as there was then, but also kind of the warning that, we could see, some of these companies, turn into pipe dreams. Where's kind of the line? Do we, need to see, how many SPACs a year, potentially are traditional IPOs, companies going public? Is there too many SPACs out there right now? I guess is the biggest question.
So if you take 6,000 missing companies and you said 600 companies went public via SPACs, that's 10 years. And that's saying no new, companies got created. I mean, there have been more unicorns created in the beginning of this year than there are SPACs that have announced the merger. And so I don't think we're anywhere close to catching up on the backlog. The issue is, can we avoid the excesses that brings the SEC in to shut the party down?
Perfect. Any SPAC deals that you've been involved in that you want to talk about today?
We're in the middle of doing, our hunt, and so I have to just be,
understood.
my lips up.
So what are some things, as you look at these private companies, you said execution. What are some of the big qualities that really stand out in these private companies that you think, should be publicly traded?
What I'm looking for is a company that is only unprofitable simply because they're dumping all their money into growth. But the margins are there to support a profitable business the minute they either pull back on the growth or, reach that number where their overhead's just covered by the growth. I mean, for us, that was it. I mean, we had a marginal 20 cents on every visitor to the website. And it was just a matter of how many visitors could we get to cover our cost. And we dumped everything back into growing. And that's a winning formula. What you don't want is a company where every dollar of revenue you lose, you have negative marginal revenue on it. That company shouldn't be going public.
So, Will, maybe if you don't want to give specific names, maybe you can give us like a theme or two or three that you're watching. Like, are there specific themes you have?
So in our IPO, with our backgrounds, it's SaaS. We love SaaS. I was a subscription business. All my founders have been in SaaS businesses. Category creators. I mean, we do like those companies that, this thing didn't exist and they've created a whole new industry around this type of software, this kind of product. That and fintech. I mean, but fintech fits those other two themes tremendously.
Well, someone in the chat, we've got a question from Brad here, so since you're talking, profitability and financials, what size gross margins are you looking for? So maybe, as you play out the financial projections of those companies, what do you see long-term gross margins for a attractive company going public here?
Well, it depends on the sector, right? So for SaaS, you need 65 to 80% margins. I mean, each kind of business, has a healthy number that says, okay, this is a team that's in the right place, being run the correct way.
Awesome. So, I know you won't give, individual tickers for that you've been involved with, but, as you kind of, step aside and look at some of the SPACs that have already announced deals, anything stand out, SPACs that have announced or completed deals where you think, hey, that's a company that should be public and can do well long term?
I think many of the SaaS businesses that have been announced, these are companies that could have raised money either way. It's funny, when I talk to founders, I feel like we're at that. I don't know if you remember the fable of the fox and the grapes. And, the fox can't get to the grapes and eventually goes, those grapes suck. I don't want them. And so I feel like tech founders in particular have been trained to think being public's a bad word. And when in reality, they just couldn't go public. And so therefore, so I think it's a matter of these SaaS companies could and should be public. And when they are, then they can start buying up their competitors with either cheap financing or with stock and really roll things up. And if you look at what Barry Diller did with IAC in terms of he bought hotels.com, he bought match.com, he bought Ticketmaster online, and then he created tremendous value. So if they can flip the switch in their head and access this really, great tool of being a public company, they'll be able to vastly outpace their competitors that only have private financing.
We got a couple more questions here from our chat. Well, one is, what markets are you looking at? Are you just looking at the U.S. or are you looking globally?
We have looked at a few things globally, but it has to be U.S. European centric with an emphasis on U.S. SPACs, I guess, used to be a dirty four-letter word for Chinese companies to back into the U.S. market. Now, there's some great Chinese companies, but we're not looking there because that isn't our background or our specialty.
Here's a good question from Chris Delacchio. What do you think about the amount of capital raised by a SPAC? Is that indicative of success or failure? The more capital raised, the better, like a Bill Ackman versus they're all large, in a vacuum, but
it constrains the deal. So for instance, if you raised $1 billion, you cannot merge with a $500 million company without basically diluting the hell out of the founder.
Yeah.
And so it basically shifts you into picking deals of a certain size. We picked a smaller SPAC because statistically, there are just a lot more targets at our size. And as a stock, let's say you're buying the stock. Well, which do you think is easier, taking a $500 million company to $5 billion or taking a $5 billion company to $50 billion? Which of those is statistically more likely to occur if the company keeps growing? So I feel like staying on the smaller end of the scale gives us better range of targets to go after. But it does preclude us from doing the monster deal, but there are just not as many of them.
Do you look around at other SPACs and do you get the sense that people are overpaying?
It's really determined by the pipe investor. That's the money that comes in that knows the target. And so I feel like that's a great natural check so that I don't just go over with the founder and say, let's just make up a number that makes you really happy and let's go out. No, we have to actually go to real investors and convince them to come in at that valuation. And so I feel like that's a really good.
Here's a question from our normal host who had emergency root canal surgery this morning, but I guess he's back in the chat. Mitch, Hoch, Will, are there any unicorns that you think are left?
Oh, there's so many great companies out there.
All right, like who?
Okay, just I'm thinking of like crypto. So Coinbase went out, but there are numerous. I mean, I can just go down the list of all these great crypto companies that are out there that are making tremendous amounts of money, and they're not ready or they haven't found the right timing. But there's at least 500 or 600 unicorns, many of which, the ones that I've looked at, have tremendous business models. Like it's just a matter of the founder going, now's the time, or the management team going, we need to access this public market so that we can outpace our competitors.
Perfect. I've got one last question here. You mentioned, a lot of companies, these private companies have, seen their valuations rise. But then you also talked a little bit about, the travel sector, which has me wondering, due to the pandemic, are there some private companies out there, that have seen valuations decline that could be attractive, candidates to go public here as reopening plays, via SPAC?
I think so. I mean, we looked at a couple of travel segments. I mean, I think you almost have to give them a pass for last year. I mean, no one puts on their spreadsheet global pandemic, 2 years from now. What are we going to do for that? And, there's every sign with the amount of money that's been printed, the economy is going to roar back in a massive way. I mean, everywhere I'm on the board of a bank in Southeast Arkansas. The county that we're in, the deposits are up 30% in the middle of nowhere. And this is just government money hitting the bank accounts of all the citizens of the county, farmers, business owners. And so I feel like we're in for a hell of a year. I mean, it's fixing to zoom up pretty fast.
All right. And I thought of one more question here, and I don't know if you'll give specific, names or tickers here, but we did mention, that vehicle company that pushed their vehicle up a hill. You mentioned, some of these are down a hill. They're going uphill now with their share price today. But you mentioned, or Spencer asked about, companies going public, maybe where you question the valuation. When you see some of these other deals get done, what are some red flags, that you see that would say, hey, this valuation is really high or they're not going to make it long term?
Well, if you can only value the company on 2025 projections, and versus if I had to assign a value just to today, then I mean, even if the company's honest and they're going to try really hard, it's really in a different category of risk than everything else. Versus I've got a company that's worth 400 or 500 million today, and if they execute, it could be 5 billion. It's almost a 0-1 kind of binary outcome based on executing. And again, like the EV space, look at how hard it was for Tesla to execute, and they've done a hell of a job. But I've talked to early investors, and it really took a long time and was a huge amount of risk involved. And there's so many companies like them that didn't make it.
Perfect. Well, I think that's going to wrap up all our questions here. We loved getting this background information, the behind the scenes of getting these SPAC deals done and, hearing some great insight on, what makes a private company, attractive to go public via SPAC. So, guys, our guest today, Will Bunker from LightJump Capital. So thank you, Will, for taking time out of your busy schedule for joining us on the show. We look forward to hearing more from you soon.
Anytime. Thanks a lot, guys.
Thanks, Will.
Can I tell you something that Will said? He said he's on the board of a local bank. Low key, I've always thought it'd be really cool to be like involved in a local community bank. I don't know why I've thought that. It just seems like a really fun thing. You're involved in the local chamber of commerce and providing capital to local businesses. I don't know. That's it. Maybe part of it's to do with the pandemic and seeing the destruction of local businesses. But I've always thought being involved in a local community bank would be a really fun thing. Nothing to do with SPACs, but Will mentioned it, and I thought that was fun because
that's great. That's great.
I've always thought that was cool. We got a great question that I don't think we can answer right now, but I'm going to try to get Brad an answer. Here is the question from Brad Moore. What is the average amount of stock that a traditional IPO will offer compared to a SPAC investment in terms of control of the company, right? So when you do a traditional IPO, how much, what percent of the float are you bringing public to are you bringing to the market versus a SPAC? I don't know the answer to that question, Brad. I have an idea of who might know. Renaissance Capital does some really good research on this. I will try to find an answer for you because I don't know. That's a really good, specific question in terms of bringing company to market and who controls who controls the shares. A lot of times, especially with tech companies in the last decade plus, really, I guess, since Facebook. They'll go public with a dual share class, right? So, like Mark Zuckerberg has one class. You and I have a different share class. He's got all the voting rights. We've got nothing. And so there's that also to factor into this thing. But great question from Brad, I thought.
I think, that one just kind of varies, depending on the company. I just looked one up, Honest Company, Jessica Alba's company. It looks like their shares outstanding in their S1 was around 75 million. And I think their IPO was for 25 million shares. So you're looking at about, 33% of the company there. So, it just depends on the company. Some of them do these small floats now, right? Which we've heard Matt Hammond talk about, on pre-market prep. But really it's about, how much control do they want to keep of the business? And same with these SPACs, except the SPACs end up being the percentage is typically based on the financials, right? If you're a $1 billion SPAC and you're doing a deal for a $5 billion company, shareholders are going to get 20%. That's the math. So a little bit different with the control there.
How you looked it up so fast, man? How'd you do that?
The power of Google and the Control F search key, my friend right there. So I just knew from writing these IPO preview articles, Honest Co. I was like, that's an easy one. I know they just went public, and that's what I found. So, Brad, that's a great question, though. Yeah. And I wish I had a better answer, but that's the big picture answer is it really just varies. So I don't know what the average is, but that's what I've got for you.
Yeah, and I would imagine like if you can get like an idea of like a range, then the outliers are red flags, right? Like if you see a company that's going public and they're selling like 90% of the company, you're gonna want to be like, wait. Why are they selling 90% of the company to me right now? And on the other side, if they're selling 1%, you're like, what am I getting here? I'm getting nothing. I get 1%. These guys own the rest of it. So the outliers are probably red flags as long as they're in a typical range. If you can get a sense for what that range is, again, I don't know, but I would imagine that's how I would look at it at least. Guys, let's get to 100 likes today. Smash that like button. Let's
smash the like. A great guest on the show, and we've got Spencer filling in today. We could have canceled the show, right? Because we don't have Mitch here, but Spencer said, "Hey, I'll do the show." Right. Yeah. So let's smash the like for Spencer filling in today. So, yeah, and he even matched me today. I mean, what better than that on a Tuesday here?
I don't know. And Mitch is here, but he can't talk. He said I guess his mouth. I would love to bring Mitch on right now, Mitch, if you can, but I think I think his mouth is like sewn shut or something, and he can't physically open his mouth. So.
That's how much Mitch likes you guys. You guys watching out there? Mitch is in the chat, and he can't talk, but he wants to be part of the show today. So smash that like for Mitch too, joining us, from the dentist office in the chat.
Drop us a 1 if you want to see a stream later on today of Mitch just high on painkillers, because I would love to see Mitch try to talk stocks or whatever he wants to talk about on painkillers. That would be fun, I think. All right, 11:45. Chris, should we do some ticker time?
Yeah, let's do it. Let's do it.
All right, let's take some questions from our chat. Do some ticker time. We had a question at the top of the show from Hob Rawgrove on Twitter about GNPK. I'm going to bring on the chart, Genesis Park acquisition. There is this chart. There we go. He, I think, just wanted your take on it.
Yeah, this is one of my favorite space plays. They're bringing Redwire public, kind of the thing behind the thing for the space industry, right? It's not a flashy name, but they're partnered with, SpaceX, Boeing, all these other companies, GPS, rockets. They've been on every trip to the moon and to Mars, I believe. Like, they are involved in the space industry behind the scenes. So, I like it long term. It's almost like a mini space ETF infrastructure play is what I've kind of called it, Spencer. So this is an interesting one.
When you say they've been to the moon, you mean that literally, not
literally. They're not a crypto coin that's just hoping. They have been to the actual moon.
To the actual moon. Okay, that's good. Good stuff. Good insights there. Let's see some more tickers in chat. Question from Sue about AGC. Let's get that guy up there. AGC. We've talked to them.
So AGC is Grab. This is the Southeast Asian.
Haven't we talked to them? I thought we talked to them. No,
I don't think so. But
I thought somebody at Benzinga had. Maybe it wasn't.
Maybe. But you know, it's an emerging market play. You know, for the what is it, like the ride share and the food delivery in Southeast Asia. I mean, it's a very large company. You know, with plenty of growth ahead. This was a large SPAC deal. It did trade, you know, if you look at that chart, it was positively received those first couple days, but now it has fallen down. You know, I like emerging market plays. I mean, I've owned Jumia for a while. I like OZON. You know, some of these markets I think have huge runways ahead of them. So, you know, I like AGC here at these levels.
All right. Speaking of Jumia, let's go on a quick tangent.
Speaking of Jumia,
we will go back to ticker time in a second, but quick tangent. Tomorrow is going to be the crossover event of the year. You probably thought like, you know, some like Marvel Star Wars thing was the coolest crossover. No, you thought wrong. We're doing a pre-market prep SPACs attack crossover tomorrow, 9 a.m. Chris and me talking to the CEO of Jumia. JMIA tomorrow, 9 a.m. right here, youtube.com/Benzinga. Chris, I'm hyped. Are you hyped?
I'm so excited. I've been pitching Jumia since like, I don't know, July or August of last year. You know, I told Raz to buy it. He didn't buy it. I bought it, and you know, quite well in it. And I've interviewed, you know, Steve Weiss from CNBC. You've talked to Andrew Leff from Citron. Mm-hmm. We've gotten all these, you know, opinions and point of views on this company, but now we get to hear directly from the CEO. Super excited. And like Spencer said, you know, 9 a.m. tomorrow Eastern time. I think we're going to have a lot of viewers because a lot of people interested in this company and, you know, get to hear more from Jumia.
9 a.m. tomorrow. Link is not up yet, but it'll be up later today. But all you got to know is youtube.com/Benzinga or on Benzinga's Twitter or on Benzinga's Twitch. The interview will be right there. 9 a.m. Eastern time. Chris and myself talking to the CEO of Jumia. Let's go back to the tickers in chat and let's talk about who did I just see? Kevin Lee, IPOF.
Yeah, IPOF, you know, there's the rumor out there, Equinox Holdings, which is, you know, the indoor gyms, the yoga company, Pure Cycle, the indoor, you know, bicycle company, possibly a Peloton at-home competitor. This isn't the target that people that bought into a Chamath's largest SPAC, I think, wanted to see, right? They wanted to see high growth. I mean, I just saw it tick below $10 there. This is one that I own, and I got in, and I was pretty disappointed. Again, that's just a rumor, though. It hasn't come out that is the official deal announcement, but based on it being from Bloomberg, I have to think that, you know, that he gets it done. But, you know, I really thought Chamath, who's kind of fallen out of favor in SPACs, right, Spencer, that he would have landed maybe a more attractive high growth name here than Equinox.
I don't know if you caught that Bloomberg article on Chamath. Did you last week? It was like Thursday or Friday. Did you catch that? They had a whole thing on Chamath and how he's doing just fine. Don't worry about Chamath. He's doing just fine.
I didn't see that article. I mean, I've seen ones before. He's had some good deals still, but you know, as far as SPAC land goes, I think there's a lot of pressure on him right now. You know, to get some good deals done, or otherwise, when he brings, you know, IPOG, IPOH, IPOI to market, I don't know if the interest is going to be there for those large offerings.
All right. Nate Millar is asking for your thoughts on ASTS. This is now post-merger, right? This is Space Mobile, right?
Yeah, so ASTS is the 5G from Space company, right? So this one to me, I've always liked as a long term, right? but they're years away from revenue. They're years away from customers. So I'm not surprised to see this one drop below 10. I mean, you just heard from Will on here, we talk pipe dreams. The question here is, since they don't have revenue, they don't have customers, will this happen? Or is this a pipe dream? Because ultimately we haven't had 5G from space on a large scale. The things I like is they are partnered with Vodafone and AT&T, so they at least have some built-in customer bases once they get that technology launched. So long term, yes. Right now, there's nothing there.
Who was it in chat? Yeah, John Doe. I'm with you. I hear 5G in space. I think science project. That's exactly what comes to mind. What else here? We got a couple more minutes. What about LO? This is also from John Doe. LOKB. I don't know this one.
LOKB is a semiconductor one. I forgot the name of the company now, but it was recently announced. So chips, right? We talked chip shortage for automotive. And this is one where you could start to see this one positively, acted by the market because they have some chip technology. The question is how quickly can they, get it to some of these sectors that really need these chips. But, I've invested in a couple SPACs that have been involved in the semiconductor game, and that's an area that I think is attractive long-term here.
We got just time for a couple more. And what about from John H. SPRQ?
So SPRQ is Sunlight Financial, Spartan acquisition. We had Sunlight on the show. This is an interesting one, right? Because they financed, large solar projects. I've heard Mitch say it, on Money Mitch, and I think also on Pre-Market Prep, solar stocks fell out of favor. I think a lot of people thought that with Biden in office, we were going to see solar stocks continue to rip, but a lot of it was kind of built into the pricing. So to me, we've seen solar stocks fall. We need to see other solar peers start to rise before a company like this really becomes attractive. Maybe when they complete their merger and we start to get some analyst notes, if there's analysts out with bullish calls on the solar sector, maybe this one gets tied in, but otherwise I just don't see a ton there.
For people in the chat, like asking Chris about when we're going to see a rally in CCIV, I don't really know what to tell you. Chris doesn't have a crystal ball. He doesn't know when CCIV, if it'll ever get back there. If you were chasing this thing, I think a lot of people learned a very valuable lesson. I hope on CCIV, and not chasing these things when they run to ridiculous levels, up to 40, 50, 60, not even on the news, on the rumor of the news.
Yeah,
right?
that was pre-deal announcement. Those highs were pre-deal announcement. And, Mitch and I preached this one on the show, take profits. I've been a long-term investor in CCIV, right? The day one that rumor came out, I got shares for, $11, $12-ish. And once it started rising before the deal announcement, I sold some in the 40s, some in the 50s. I still have a small position.
That's exactly how you do it.
Exactly. So I've always scaled out, right? Like I don't like to sell my whole position. If it's running, I play with the house's money, right? You can take out your cost basis, get your money back. The rest is profits. But with CCIV, this was unprecedented how high it traded, pre-deal announcement. And to me, Spencer, you talk about, when is it going to rise? Let's face it, this is now a trading SPAC, right? They had news out today of what their new ticker was going to be, and shares were up 5 or 6%, just on that news. This thing trades now on news, but the long-term story is until they get production and deliveries of that vehicle, I just see it trading kind of sideways here, and it's just going to move on, momentum. But otherwise, I'm holding my shares, for those deliveries because I think that's the major catalyst. But that's a ways away still.
Yeah, I'm being sincere when I say that I hope people learned a relatively like a painful lesson now, but early in their investing careers. That they can apply down the road about chasing, about taking profits. Like Chris said, he was in. He took out his cost basis, right? He made money. He took out his cost basis. He sold on the way up. And this thing, I mean, it got to silly town. It got to almost $65. This was insane, right? Like even in the SPAC mania, this was insane, right? Like so for those of you that were in at 20 or 30 or 40 or 50, 60, whatever, I'm sorry, but now you've learned a lesson about we talk about all the time on pre-market prep about cutting losers versus being the guy or the girl and saying, no, I'm going to be the hero. I'm going to be the hero that holds Amazon through multiple 90% corrections. If you can take that pain, then take the pain and don't cry about it.
Yeah, I think the two important lessons, Spencer, you said cutting losers, and then as I said, taking profits. If you combine those two things, I think you'll do very well in any type of market, right? Because those are two valuable lessons.
Cutting a loser does not make you a bad trader or a bad investor. We all have losers. Some people have a majority of losers. It's just that the winners are big and the losers are small, right? It doesn't make you a bad trader or investor if you have a loser. I mean, so I don't know. That's just
Spencer. I've got a ticker for you, one that's moving here. So TTCF. Do you? So Mitch and I have had a hard time with this one. I've been kind of bullish on it. Mitch has been bearish, and the biggest reason why we can't see the big picture is neither one of us eats plant-based food. Do you eat plant-based foods at all? Otherwise, we're gonna have to find an expert from Benzinga that can really tell us, hey. Because Tattooed Chef has these new products out in Target stores, in Costco, and I think they're selling well, but I just don't know, the big picture here because I don't eat it myself.
Wait, when you say you don't eat, is that like a principle thing? Like on principle, you don't eat plant-based meat?
I don't know. I like my meat, so
you should try it. It's pretty good.
I do want to try it sometime. That's the thing. I feel like I should try it. So. Especially their products, right? Because it's not so much like a plant-based hamburger. It's like a meal, right? Plant-based meal. Yeah. I mean, I'm not a big fan of wanting like a veggie burger, but Dude,
it's not it. It's not it, man.
Yeah.
It's not it. I've never I can't speak to you because I've never had their products. I've had Beyond Meat, never had Tattooed Chef. So I can't speak to the products. I'm sure they taste fine. Okay.
So on our way to the Lordstown Motors factory tour, we can stop at Target, we can get some Tattooed Chef meals, and we can live stream that too, taste testing that. I mean, we could do a whole road trip out of this.
I don't. If you're saying they're offered at Target, I believe you. I don't know, but I haven't seen them in the store, but where I shop. So maybe that's part of the problem. But I think this is a trend that's not going away. Like. In the realm of secular growth trends, plant-based meat is one of the ones that is here to stay for sure. I think.
Yeah.
Does that mean Tattooed Chef is a $50 stock? No, right? But I'll withhold judgment until I actually try the damn product, which I haven't even done yet. Beyond Meat tastes pretty good, though that stock is a whole other problem. But so maybe you asked me what I think, and I didn't really tell you. I didn't really give you a buy or sell. I'm gonna say sell for now. But there aren't that many players in the space to my knowledge, and sell for now, but still on my list of maybes down the road is what I'm gonna say on Tattooed Chef.
Yeah, that works.
All right. Okay. It's 12:01. Look at that. See, time flies when you're having fun. Are the guys at Power Hour ready? I don't
probably not. They're never ready on time.
They're never ready on time. This is what we deal with. All right.
They're either ready on time and they cut in to tell us that they're live, or they never go live. That's what happens.
Yeah, I don't know. I don't know what's happening.
Like right AB came on the other day and was like, "Hey guys," and I was like, "Oh, guess they're ready."
Smash the like if you had some fun hanging out with us again. If you're new, this show airs every Monday through Friday at 11 o'clock Eastern Time right here on youtube.com/Benzinga TV. Smash that like button. Subscribe to Benzinga Pro. It's Benzinga's real-time news and research platform. Go to pro.benzinga.com YouTube.com. You get a free 2-week trial. If you want more than that, you can enter the promo code YouTube20. That's the word YouTube with the number 20. It's on the screen right there on the bottom. That'll get you 20% off any Benzinga Pro subscription. It's what Chris and I use for all of our research, quite frankly. So check that out if you haven't already. What else did I miss on the housekeeping front? Did I get all of it? I think I got all of it.
Yeah, I think that's it. I'll just say we have another expert coming on tomorrow from Morgan Creek Capital to talk SPACs, right? We've got Mark. So excited for that. I know he's been on pre-market prep, right, Spencer?
Mark Yusko is incredibly convincing. He's been coming on the show on pre-market prep for years, and he came on pre-market prep. I want to say it was during the first Bitcoin craze in 2017 or maybe early 2018, maybe even after the bubble popped. I don't even remember. And he was so bullish. He's been so bullish on Bitcoin the entire time, and he like damn near convinced the three of us on the spot, right? Like to buy Bitcoin right then and there. This guy is very convincing. He's someone like, and maybe it's just me, but like he's somebody where you're like, oh man, I would like definitely give him my money, like to manage. You know what I mean? Like he just sounds
that's awesome.
He just sounds like he knows what he's talking about. That could be just me, but again, the guy just sounds really smart. Managed a lot of money. He ran the endowment at UNC. Now runs a hedge fund. Super smart guy. Whether you agree with him or not, I think he's a good listen. He's a good interview and good to listen to. So that'll be on tomorrow's show. I will be watching that because Mark is a great interview. So very excited for that.
Yeah, we're excited. We've been trying to get him on, and we've had to reschedule a couple times, but we're excited. They have a SPAC ETF too, I believe, Spencer, Morgan Creek does. So we're going to hear more about his ETF and what goes into that. But the other housekeeping thing, you heard Spencer say it, don't forget tomorrow after pre-market prep, 9 a.m. Jumia, ticker JMIA. Spencer and I interviewing the CEO. It's not a SPAC, guys, but this is a great emerging market company. The Amazon of Africa, they've been called. You know, we get to hear more about the big picture of e-commerce in the entire continent of Africa. So super excited.
All right, I'm being told that this Power Hour is going live right now, so we're gonna hop off. This video will redirect straight to that. You don't even have
to smash the like.
Smash the like. Wait. Before we go, did we get to that like goal?
I don't think we even got to 100.
Hold on a second. We're at 71. Come on, team. 71. Let's get to 100. I'm signing off right now.
Do it for the teeth. Do it for the teeth.
Oh, Mitch in the house. Smash the like for Mitch, guys. Surprise guest appearance from Mitch.
I thought his mouth was sewn shut.
Barely speaking here, but do it for the teeth.
I bet you can't feel half his face. All right, everyone. Power Hour up now. Chris, thanks for being you, man.
Thank you.
All right, we'll see you guys later. Power
Bye,
Hour
guys.
up right